and on a daily chart, and the bias is for this particular wave 4 to unfold further down to the 38.2 retracement level, or the wave 4 of 1 lesser degree. And one of the reasons for this is that this wave 4 as it stands at the moment is just a little bit small in fact, because when we look at wave 2 coming back over here, this was, a good, I don't know how many days, but it was a good sort of 40 odd days. And this one here is sort of, around 20 days. And wave 4 is normally more complex and longer than in time in regards to wave 2. So that's why the bias is like this here. And the other thing too is, like I mentioned before, the medium level 1650 here is a really good line in the sand. So look, until this becomes support, then we really need to, explore this possibility here. It's not that we're going to forget about other wave counts, and the other wave count is that this A, B and C in here, could be a wave 4 here being quite small through here, if it's a really strong bullish market and good news and so forth. So we're mindful of a move further up through here, and that would read as such. It would read as the A, the B and the C here on the 4-hour chart. Then up for wave 1, back for wave 2, and then up for wave 1 and back for wave 2, 50 or 60 odd percent, and then up for wave 3 and so forth. So, we're not forgetting that, but, and we'll investigate that, because it does appear that the Australian market is ready to rally. Sure, there was a reasonable amount of volume that come in. Will be interesting to see what comes in from that point. But also I want to point out too is that in this larger wave 4, we'll be looking, this is an A wave and a B wave up to here, and then the C wave that would be, further down through here. But even this B wave here, we could actually get a little sort of bop up through here into the 1660 area through here, really retesting this supply sort of area. So that will sort of, lure us into also thinking that it's the third wave going up through here as well. So look, we'll play a part in that in terms of, gleaning some small positions there and managing any short positions that we have. But it's just one of the little things we've got to get through. Once we understand what we've got here, then this C wave down here, we can be looking to go short again, because we'll be looking for, down around the 1550 area. We're looking for 5 waves. It'll take, another sort of 15 days to get down there. So yeah, it's the bearish bias will be in. It's the same with the Dow Jones as well. The same, as you can see here, I've got wave counts sort of all over the place. So we are tracking this situation of up for 1, back for 2 here, up for 1, back for 2 here into the 15,000 again, and then a move up through there. So that's possible. But we're also mindful that this larger A wave here, and looking for the B wave either here or over here, as such, in terms of the A, the B and the C here, 4B, and then looking for the C wave to come down further. So look, it will work itself into a corner, and we'll come out fighting on it. But for the meantime, we just got to chill out and allow the market to unfold, and and confirm its direction, and also confirm some sort of price point as a retest we can work from. The Australian market is a little bit sort of different. Yes, it has rallied and so forth, but we're either at the end of the 5-wave structure to the downside, which I'll just bring up here for a moment on the daily chart here. We could have the 5 waves to the downside here. Okay, so that's the real possibility. So we could have our low in here. If I just clear this out here for a moment, just to show you into the bigger picture, so to speak. So, across the 5,000 or so forth. So, but we'd still be looking, we're basically trying to work out if we've got 5 waves down through here. If that's the case, then we'll be, as we'll be looking for a 3-wave counter trend as a retest to the 5,000. And then we'll be looking at another move down through here as such. If we've got 5 waves here, we'll get 5 waves over there. This B wave here, or B wave here, should pull back, 50, 60%, but we'll just pin it to the 5,000 at this point in time through here. So either that's the scenario there. I'm sorry if I'm going through this a little bit quick. It's just got a few things on today. So the other possibility here is that we've got a wave 4 through here, and that would bring us back into the just above the, well, if we've got a wave 4, then that will bring us back to, well, to just above the 4800 here. So let me just grab this here. So it'll be interesting to see what we've actually, well, no, just before that actually. So the 4800 there as such. So it'll be interesting to see what develops here. Currently we have, we can count this in terms of wave 1 here and wave 2 to here. And then we can go wave 3 all the way up through to here, which would be the 1, the 2, third wave up to here, the fourth wave across, and then the last fifth wave with 5 waves in it through here, which would leave us at wave 3 here. And then wave 4 pulling back to the, the 40% mark into here, which where it is now, or the fourth wave of 1 lesser degree into this little area here. So from here we can pretty much expect a move up from here in terms of the 1, the 2, the 3, the 4 and the 5 making a new high in here. But once we've got that, if that is the case, once we've got that, what we do have then is we have a 5-wave structure to the upside. And then from that point, we'd be looking for a 61.8 retracement level. So we can take from that point, we can bring that up to there. It would be coming back into this area here, the 47, 40, 50 area through there, would be coming back in a 3-wave price action, which would basically be a corrective pattern across the 4800. So we'll just bring it down to there for the time being. But because we got 5 there, that means it will get 3 here. And then the good news is that once we get those 3 there, then we'll be looking for another 5 waves up through there, which will be roughly the same. Well, as a starting point, we can take that distance here, that wave 1 here, and then add that onto this section here, because it's either going to be an A wave, a B wave, and a C wave to the upside. So we can be looking for 4900. So a good trade. We just need it to unfold across the 4800. This is also the classic trading levels pattern as well, where we have the arrival, the reaction, the first high above the level, the corrective pattern, then support, and then up to the next level. So that's what we're looking for there. Just be careful we don't get chopped up in here too much. Let's have a look at commodities. Oil. Last time we're looking at the daily or the weekly chart here, and we're looking at the resistance across the top through here, but expecting the wave structure to send the market higher, which it has done, and it's pretty much reached on 98 now from 95. So what we were looking for was, this is a sort of the classic trading levels pattern where we have the arrival, the reaction, the first high above the level, the correction, and then looking for support on here, and then up to the next level. So normally the distance across here would be called the accumulation process, and this is the distribution process. That's Richard Wyckoff's work. But look, anyway, we're at the next number here, which is number 98, which is a profit-taking number. So we can pretty much, we're still expecting this to be a retest of 100, move up higher. So we may see more of a sell-off here at this point here, but the point is that, it is resistance at the moment, like that was there, and you need to go through this process in its own way to get support back on here again. So there's no rush. If you got the trade, well, that's great. If not, well, then you just have to wait. So anyway, that's chuffing off in the right direction. The base metals and the copper market here, I'm a little bit confused about the pattern across here. It's just a little bit confusing for me, so I can't really give a clear indication of it. But what we can say is that, just as we were talking about the classic trading levels pattern before, it's pretty much the same here as well. But on the downside, the market was obviously coming down through here. It gets its arrival, its reaction, its supply or resistance, and then makes its first move down. So eventually this is going to find it's going to find resistance through here and then move down further. Now, it may have found it already. I don't know if we can put that in there as an A and a B and a C in here just yet. I don't know that. But one of the things is that the materials sector that we've been looking at, and China and and BHP, it's all the UBS, DJ UBS commodity index. They're all pointing lower. So it's highly probable that the 320 will become the resistance. And the important thing with the 320 it's part of group one. It's the center of group one. It's the pivot within group one. And I normally find that once it does become the resistance, then it really becomes a part of moving down further into the major level here, which would be the trading level 3 here. But not only that as well. The other side to this too, just because it arrives here, we normally have to bring in the levels below this as well, which would be the 280. I know that seems a long way away, but that seems to be the normal process when dealing with group 1, 10, 20 and 30, and when group 2 becomes the pivot, becomes the resistance. It kind of confirms and locks it in that it will be trading at this level down through here. And if it's trading at this level, then we need to bring in the next minor level below this, which is the 280. Sure, the 290's there, but the 280 will play a larger role through there. And this would probably line up with the Australian dollar still having to do another leg to the downside once wave 4's completed as well. So bottom line, until this 330 up here, 320 here, 1, 2 and 3 here, until this 3 here becomes the support here to go higher, then we'll be in bearish mode with this particular correction and looking at this being a wave 2 here, because we do have 5 waves down here for wave 1, and we're looking for some type of correction here as a rally and then a failure at that point to move further down, and the failure could be from just here, so we'll see that. But if that's the case, the materials are going to be weaker from that point. The gold market, we're still bearish because we've got this 5-wave structure to the downside here. It just hasn't given us a setup to sell in terms of selling new lows, or so to speak. So we're looking for that wave 2, that, as we mentioned last time, that ABC here can have the wave 2 there. However, we've got to start looking up here a little bit higher as well to the supply level up here at 1410 or the 1400 here, the 61.8 retracement level. Not that it's such a big deal really, but it is up at the 14 sort of 100 here. So we may be seeing this little ABC here as the A wave, the B wave, and a little structure up here to the for the C wave up to into the 1400 here, and maybe even to the 1410 there. But we wouldn't turn long unless we had a solid support on the 1400 there. We just couldn't do it. So, and our short position would be the 1372 on the short side there. So we're still, this is working itself into a corner now, because we've got this high and we've got this low through here now. So that's the trading range. So it's just going to diminish into this point here and either drop to the downside, which is our bias, or move to the upside. Either way, we'll get it at the right time. All right, let's have a look at FX. Okay, the US dollar here, we're in a new contract month. I need to square these charts up a little bit, and I need to sort of sort them out a bit as well. But without looking at the bigger picture, because I need to reorganize the charts as the new contract month has come in for the futures. This pattern across here, as you can see across the 81 here, is corrective in terms of an A and a B and a C, a 3-wave swing, and this sharp move down here points it into having further downside through here after perhaps another retest from the 81 and down lower through here. The euro, okay, we've got the larger picture here. So look, as while we're here, let's start from here then. So this is a weekly chart, and this is a large correctional pattern that we're looking at in terms of an A wave to here, an A, B, C, D and E, a triangle through here, and then we're looking at this being down for 1 here, and we're looking for this as an A, B, C here, back for wave 2 here. Okay, so and then we'll see wave 3, wave C to the downside here. So we're looking at this as an A and a B and a C. So what we're doing is we're counting 5 waves up through to here, which will bring us in around the 134 mark, probably a little bit high there. I'm not into traditional patterns that much, but we do have a head and shoulder pattern developing here as well. So if you're into those, then you probably know more about it than I do, but that's what's sort of developing there. So looking at this bit closer through here, where are we? So, okay, so we're looking at this as an A and a B and a C wave up through to here. And we're looking for 5 waves in that. The 1 and the 2 is into here. So it appears that we've got 5 waves up into the 3rd wave now. So we're at the top of the 3rd. We're looking for wave 4 here, and then we're looking up for wave 5, which will be, higher than the wave 3 here. It won't be that much because wave 1 was quite small here, so anywhere between the 134 and the 135 as such, and then we expect it to roll over from that point there and making new lows through here. So we'll confirm that once we see the completion of wave 5 here, and then we see 5 waves down and 3 waves back up, and then we'll be looking for the short to the downside. Just drilling into that a little bit further here. So this across the 133 here, look, yes, it could just push up from here. We've got the A, the B and the C here, and it can just push straight up from there because it's got support on the 133 here, but a wave 4 normally pulls back to the wave 4 of 1 lesser degree, which is through here. So it's highly likely that this here is just part of a corrective move in terms of another C wave coming down through here, a larger pattern before we see any further upside there. So I guess that, say the 133.50 here, if you got support on the midpoint, the 50, then you could scale in from that point, but be mindful that it can roll over on you. But that midpoint would be the most important point between the 33 and the 34 there. So a nice solid support on that. You would have to trade what you see and go with that. Otherwise, don't be surprised if we see a move back lower here first before we see any further upside through there. I mean, obviously there is, there is support through, this whole sort of region through here, so it may not come back down that far at all. It might just come to this sort of area here if it's going to play out. But one of the things is if it does come down here for short term and then gets back up there, then you can trade it long from that point. But that testing lower first, then getting up there is a good way to go. Okay, the Australian dollar, right, on the daily chart here. So look, basically we're looking at being at the bottom of wave 3 here. So we've got wave 1 and wave 2. And a reasonably clear 5-wave structure down here for wave 3. We're looking for wave 4. The wave 4 can pull back to the wave 4 of 1 lesser degree through here. So that's what we're looking at. This first move up, wave 4s are normally a bit complicated as well. So what we're looking for here is, we think this is just the first leg of the wave 4 here. So let's drill in and have a little look at that. So what we're considering here, this move up through here so far in 3 waves, and we'll look at that as an A and a B and a C just for the A wave. A B wave will pull back 61.8% of textbook stuff, of course, of the A wave here. So we'll bring that into the closest largest number, which would be the 95 here. So we're looking for some sort of, corrective move back into here and then wave C to the upside there. On the 4, this is the 4-hour chart, it's a 1-hour chart. So yeah, look, this is the A, the B and the C up through here. So the B waves are always in 3 waves. So we're looking for an A and a B and a C here. In the C wave is always 5 waves, so we'll be looking for 1, 2, 3, 4 and 5. Once that's complete, then we'll see a wave C to the upside through there. So that's what we're looking at there. Alrighty, well, sorry for such a short report. It's Saturday and I've got a few household duties to do. Alrighty, so catch you soon. Bye.